Have you ever pondered the true value of your homeowner's insurance? It's not just a piece of paper tucked away in some drawer. It's a crucial safeguard for one of your most valuable assets, your home. But the importance of homeowner insurance stretches beyond the bricks and mortar of your abode. It also encompasses protection for your personal belongings, those treasured items that transform a house into a home. But wait, there's more. Ever considered how a mishap at your property could impact your financial future? A lawsuit for damages could be a real game changer. That's where liability coverage steps in, offering a safety net against such unforeseen circumstances. So you see, homeowner insurance isn't just about safeguarding a structure, it's about securing your peace of mind and potentially your financial future. How well do you know your homeowner insurance policy? Let's delve deeper. Homeowner insurance might seem complex, but it boils down to some key components. Let's start with the first element, structure. The structure component of your homeowner insurance covers the physical building of your home. Imagine a scenario where a tree falls on your house during a storm. In this case, your insurance would step in to cover the cost of repairs, ensuring you're not left in the lurch. Next, we have personal belongings. This aspect of your insurance covers the items inside your home. For instance, if a burglar breaks into your house and steals your precious antique clock, your personal belongings coverage would help compensate for the loss. The third component is liability. This covers you in the event someone gets injured on your property and decides to sue. Picture a situation where a friend trips over your rug and breaks their arm. Liability coverage would help cover the legal fees and any potential settlement. Finally, we have additional living expenses, or AAL. This part of your insurance covers the costs of living elsewhere while your home is being repaired or rebuilt. Let's say a fire renders your home uninhabitable. Your AAL coverage would help pay for a hotel room, restaurant meals, and other living expenses while your home is under repair. Each of these components plays a crucial role in your homeowner insurance, providing a safety net for a variety of scenarios. It's essential to understand each one and how it applies to your unique situation. This will help ensure you're adequately covered and can recover quickly in the event of a disaster. Remember, homeowner insurance isn't just about protecting your investment, it's about providing peace of mind. It's about knowing that if the worst happens, you won't be left struggling to pick up the pieces on your own. Understanding these components is the first step to making the most of your homeowner insurance. How much coverage do you really need? That's a question that often leaves homeowners scratching their heads. Coverage limits are not something to be taken lightly. They are the maximum amount your insurer will pay towards a claim, and understanding them is crucial to ensuring you're adequately protected. Let's dive in. Imagine your home is like a castle. Now, your coverage limit is akin to the height of the castle's walls. The higher the walls, the more protection you have. But there's a catch: higher walls also mean higher costs. So it's about finding the right balance. Too low and you may be left exposed. Too high and you may be paying for protection you don't need. A common mistake people make is setting their coverage limit based on the market value of their home. But in the event of a disaster, you're not buying a new house off the market, you're rebuilding. So your coverage limit should ideally be based on the cost to rebuild your home, not its market value. Another pitfall is forgetting to update coverage limits. Let's say you've renovated your kitchen or added a new room. These improvements increase the cost to rebuild your home, but if your coverage limit isn't updated, you might find yourself underinsured. It's also important to remember that not all coverage is created equal. There are specific coverages for certain items like jewelry or art, which have their own separate limits. If you own valuable items like these, you'll want to make sure they're covered adequately. Lastly, don't forget about liability coverage. This protects you if someone gets injured on your property and decides to sue. The cost of a lawsuit can be astronomical, so skimping on liability coverage can be a costly mistake. Remember, the goal is to be adequately covered, not necessarily to have the highest limit. It's about understanding your needs, evaluating your risks, and setting your coverage limits accordingly. With some careful thought and proactive management, you can ensure that your castle is well protected without breaking the bank. What's in your home right now? Could you list everything from memory? It's a daunting task, isn't it? Yet this is precisely why maintaining an inventory of your personal belongings is so crucial when it comes to homeowner insurance. Imagine you're standing amid the aftermath of a calamity: fire, flood, burglary. The chilling reality sets in. Your home and its contents, the tangible bits of your life, are damaged, destroyed, or missing. Now, you're faced with the task of filing a claim with your insurance company, and they ask you to list everything you've lost. Could you do it accurately, down to the last teaspoon? Let's consider John, a homeowner who found himself in such a situation. A fire had devastated his home, and he was left to account for everything he lost. Without an inventory, John spent days, even weeks, racking his brain to remember every item, from the valuable to the mundane. He managed to list the obvious: furniture, appliances, electronics. But what about that antique clock he inherited from his grandmother, or the limited edition vinyl records he collected over the years? Without a detailed inventory, many items slipped through the cracks, leaving John undercompensated for his loss. Maintaining an inventory is not just about listing your belongings. It's about understanding their worth, including their current market value, and ensuring they're adequately covered by your homeowner's insurance. It's about having a clear record, complete with descriptions, receipts, and photographs where possible. This record not only makes the claims process smoother, but also helps to ensure you're compensated accurately for your loss. In essence, an inventory is your backup, your safety net. It's proof of what you owned and what it was worth. And in the face of a disaster, it's one less thing to worry about. So take the time to create and regularly update your inventory. It might seem tedious, but the peace of mind it brings is invaluable. After all, as we've seen with John's story, you never know when you might need it. An accurate inventory can make the claim process smoother and ensure you get the compensation you deserve. Ever wondered what your deductible really means? Well, let's unravel this mystery together. A deductible, in the simplest terms, is the amount of money you agree to pay out of pocket before your insurance coverage kicks in. It's like a financial threshold you must cross before your insurance company says, "All right, we've got it from here." Let's imagine for a moment you're in your cozy reading nook, savoring a cup of hot cocoa, when a hailstorm decides to wreak havoc on your lovely home. The damage? About £5,000. Now, if your policy has a deductible of £1,000, you'll be responsible for covering that initial amount. The remaining £4,000? That's where your insurance company steps in. This might raise a question: why would I agree to pay a deductible? It's a fair question. The answer lies in the relationship between your deductible and your insurance premium, the amount you pay for your policy. Typically, the higher your deductible, the lower your premium. It's a balancing act of sorts. You could opt for a lower deductible, but be prepared to pay a higher premium, or you could choose a higher deductible and enjoy lower premiums. But remember, you'll need to be ready to shell out more if a covered loss occurs. This brings us to an important point. It's crucial to select a deductible that suits your financial situation. If a higher out-of-pocket cost in the event of a loss is going to stretch your budget thin, you might be better off with a lower deductible and slightly higher premiums. Conversely, if you have a good rainy day fund set aside, a higher deductible could save you on premiums in the long run. Remember, insurance is all about peace of mind, and the right deductible is part of that puzzle. By understanding how deductibles work, you're in a better position to make informed decisions about your homeowner's insurance. Choosing the right deductible can significantly impact your insurance experience. So take some time, evaluate your options, and make the choice that's right for you. Do you have a treasured family heirloom or a pricey piece of artwork? If so, you might want to listen closely. When it comes to homeowner insurance, there are certain items that may require a bit more attention than others. Imagine this scenario: your great-grandmother's diamond necklace, a piece that has been in your family for generations, is stolen in a burglary. You've got homeowner insurance, so you're covered, right? Well, not exactly. Most standard policies have a limit on coverage for personal belongings, and often it's not enough to cover high-value items like jewelry, artwork, or collectibles. These high-value items are unique. They often carry not just a hefty price tag, but a wealth of sentimental value. Losing them can be a double blow, both financial and emotional. That's where special coverage comes in. Special coverage, also known as scheduled personal property coverage, can provide the extra protection that these items need. Let's delve a bit deeper into how this works with special coverage. You can schedule items, meaning you list them separately on your policy for a specified amount, which is typically the appraised value. This way, in the event of a loss, you're not left grappling with a coverage limit that falls short of the item's value. It's also worth noting that special coverage often provides protection against scenarios that standard coverage might not cater to, such as accidental loss or damage. So, if that diamond necklace we talked about earlier mysteriously disappears or gets damaged, you'd still be covered. Now, you might be thinking, but isn't that going to cost me more? Yes, adding special coverage to your policy will likely increase your premium. However, consider the alternative. Without it, you could find yourself unable to replace those valuable items if they're lost or damaged. In essence, special coverage is about more than just safeguarding your valuables. It's about peace of mind. It's about knowing that your grandmother's necklace, that piece of artwork you invested in, are protected no matter what happens. Special coverage can offer peace of mind for your most valuable possessions. So ask yourself, isn't that peace of mind worth it? Planning a home renovation, your insurance might need a makeover too. Home improvements are exciting. They can breathe new life into your living space, increase your comfort, and even boost the value of your property. But did you know that they can also affect your home insurance coverage? It's true. Whether you're adding a new room, installing a swimming pool, or even upgrading your kitchen appliances, these changes can significantly impact your insurance needs. Let's consider a real-life example. Meet John, a proud homeowner who decided to renovate his kitchen. He upgraded his appliances, installed new countertops, and even added a beautiful island. The end result was a stunning kitchen that was both functional and stylish. However, John made one crucial mistake. He didn't update his home insurance policy. His policy was based on the value of his home before the renovation. Therefore, it did not cover the new appliances, countertops, and island he had added. Unfortunately for John, a few months after the renovation, a fire broke out in his new kitchen. His insurance company only compensated him based on the value of his old kitchen, leaving him to cover the cost of the new appliances and upgrades out of pocket. John's story is a cautionary tale for all homeowners planning to improve their homes. It's crucial to inform your insurance company about any home improvements, as they can increase the replacement value of your home. This means if something were to happen to your home, like a fire or a flood, the cost to rebuild or repair your home could be higher than what your current policy covers. It's also important to note that some home improvements could potentially lower your insurance premiums. For instance, installing a top-notch security system or a new roof could reduce the risk of theft or damage, and therefore reduce your insurance costs. In conclusion, home improvements are not just about aesthetics and comfort. They're also about ensuring that your home is adequately insured. By keeping your insurance provider informed about any changes to your home, you can avoid finding yourself in a situation like John's. Keep your insurance up to date to avoid unpleasant surprises. Location, location, location. It's not just important. For real estate, it plays a significant role in homeowner insurance too. The geographical position of your home can dramatically impact both the cost of your insurance and the coverage you need. Let's take a look at some examples. If your home is located in an area prone to floods or earthquakes, standard homeowner insurance policies might not provide sufficient coverage. In such cases, you may need to consider additional policies specifically designed to protect against these types of natural disasters. Now consider a home nestled in a rural area, miles away from the nearest fire station. In this case, the insurance company might view your home as a higher risk for fire damage, and consequently, your insurance premiums could be higher. Alternatively, if your home is in a bustling city, close to emergency services, your insurance costs might be lower. But you might have to think about additional coverage for potential risks associated with city living, such as theft or vandalism. Climate also plays into the equation. Homes in areas with harsh winters might be more susceptible to damage from snow, ice, or freezing temperatures. In contrast, houses in warmer, dry regions might be more at risk from wildfires. Again, these factors can influence the type of coverage you need and the amount you pay for it. Then there's the neighborhood. If your home is in an area with high crime rates, insurance companies might consider your property to be at increased risk of theft or vandalism, which could drive up your premiums. Interestingly, even the proximity to the coast can affect your homeowner insurance. Homes near the sea might face higher insurance costs due to the increased risk of damage from hurricanes or coastal storms. So you see, the role of location in homeowner insurance is multifaceted. It's not just about where your home is, it's about understanding the specific risks associated with that location and ensuring you have the right coverage to protect against those risks. Your home's location can significantly influence your insurance needs. When was the last time you reviewed your homeowner insurance policy? Now that's a question that might have you scratching your head. But don't worry, you're not alone. Many homeowners often overlook the importance of regular policy reviews. Regular reviews of your homeowner insurance policy are like health checkups for your house. They ensure your coverage is up to date and that you're protected against any unexpected circumstances. In fact, without these checkups, you might find yourself in a rather sticky situation. Let's imagine for a moment you've purchased a beautiful antique grandfather clock, a family heirloom. It's priceless to you, so naturally it's tucked away in your living room. Now let's say a pipe bursts in the wall behind the clock, and despite your best efforts, the clock is damaged beyond repair. You call your insurance company, expecting them to cover the loss. But alas, your policy hasn't been updated since you acquired the clock, and it's not included in your coverage. The loss is on you. This could happen with any new acquisition, be it a piece of art, jewelry, or even a new extension to your home. Without regular reviews and updates to your policy, these assets may not be covered. Regular reviews also help you keep pace with the fluctuating market values. For instance, if the local housing market has significantly increased since you last reviewed your policy, you might find that your coverage is no longer enough to rebuild your home should the worst happen. Furthermore, life changes. Maybe you've started a home-based business, or perhaps you've welcomed a new pet into your family. Each of these changes can impact your coverage needs. So, you see, regular reviews are not just about keeping your policy current, they're about ensuring your peace of mind. They're about knowing that your home, your sanctuary, is protected against the unexpected. Regular reviews can keep your coverage current and comprehensive. So when was the last time you reviewed your homeowner insurance policy? Let's recap the key points about homeowner insurance. We've explored its basic components, the backbone that guarantees protection for your home and personal belongings against unexpected events. We've delved into the concept of coverage limits, highlighting the importance of setting these in line with the value of your home and possessions. We've talked about the significance of maintaining an accurate inventory for a smooth claims process. Deductibles were another crucial topic, emphasizing the balance between premium costs and out-of-pocket expenses in the event of a claim. We also discussed special coverage considerations for unique or valuable items and how home improvements can impact your policy. We underscored the role of location in influencing your insurance cost and the need for regular reviews to keep your policy current and comprehensive. Remember, homeowner insurance is about protecting your home, your belongings, and your financial future. Make sure you understand your policy.